Creamer Media's Mining Weekly is speaking to Trevor Raymond, the Director of Research of the World Platinum Investment Council. Trevor, thanks very much for chatting to us. We last spoke in November, and that was after your quarterlies. What has changed in the global platinum market since you last published your platinum quarterly in November 2021?
I think, what we published, as you said, in November was a really large surplus of over 750,000 ounces for 2021. And we published a forecast for 2022 with also a surplus over 600,000 ounces. But what we said at the time is that surplus for 2022 could actually reduce quite significantly as new information became available to the market. And I think we've started to see some of that, Martin. I think firstly, we've seen some green shoots in the recovery in the automotive industry, the supply chain issues, shortages of semiconductor chips. There seems to be some softening there and some improvement. And already we've seen some of those forecasts increase the amount of light-duty vehicles expected this year by about 1 million vehicles. The other thing is that the automakers seem to be managing better with the semiconductor chips that they have. We know that they're trying everything to meet the strong pent-up consumer demand. And what they're doing, Martin, for example, is that they're delivering vehicles with less features than those same vehicles perhaps had before. So where you've had large touch screens, they're actually delivering vehicles with much smaller screens. And things like the foot-operated tailgate opening, those sorts of features they're doing without. So we certainly are seeing the automakers' ability to provide more vehicles into the market. I mean, the other thing we've seen in December and recently is that both the major producers, Sibanye-Stillwater and Anglo American Platinum, have actually revised their own outlook for their production, their mining supply over the next few years. And that seems to be flat to down for the next while. So we think, more investors are starting to realize that the spike in production was really the result of the unwinding of that backlog of the material that built up due to those converter outages in 2020. So we're seeing some new information flow to the market, certainly putting pressure to reduce that 2022 surplus.
And Trevor, we've seen the price of platinum pick up very nicely over the last 2 weeks. What do you believe is behind that?
Yes, Martin, we have seen it. I think the strength has been interesting. There's probably 2 or 3 main drivers. I think the first is that the gold price has been particularly strong. And we do know that when the gold price is firm and moves up, it certainly moves platinum up with it. There are a lot of concerns about global inflation, and certainly those inflation concerns have translated into more people owning gold, a firmer gold price. But in general, people are still looking for a hedge against inflation. They're looking for hard assets, anything other than equities. And certainly platinum has got a lot of appeal, it's certainly greatly undervalued. So there's a lot more people that are looking at platinum as a hard asset and a potential hedge for inflation. I think the other thing that we've seen is that the metal availability in the market appears tight. I mean, despite us forecasting the surplus, there seems to be less metal available. The platinum lease rate seems to be reflecting that. You'll recall for the 3 years prior to the pandemic, lease rates in platinum sat at about 0.1%. And we noted that in Q4 that had gone up to over 1%. And then towards the end of December, that moved over 2%. So, if it's possible that backlog processing of Anglo was higher and there was more metal that came to the market in Q4, and certainly then the price has been quite firm with the elevated lease rates, it certainly looks like metal's tight. And some of that was the strong imports into China, and certainly for us to unpack where that metal's going. So I think the investor interest at these levels certainly is elevated and perhaps playing out in the spot price, Martin.
And what should platinum investors look out for over the next few months as indicators of how an investment in platinum might perform?
Yeah, it's a good question. I mean, I think, as we've said, this information is starting to flow. I suppose the first thing to watch out for, Anglo American Platinum publishes their quarterly production reporting. And in that, it might be evidence as to whether they managed to put a lot more material through the converter plant before the year end. Or even into January. And what that would mean is that surplus for 2021 would be bigger, but that certainly would bring down the surplus in 2022. I suppose the other thing to look out for is more information flow regarding the semiconductor chips and vehicle production. And in terms of demand, I think just the degree of substitution of platinum for palladium, certainly something to look out for. So all sort of interesting developments that could feed through into the market awareness of why platinum sort of appears to be in surplus yet is tight and also appears to be undervalued in the extreme.
And Trevor, are there any other developments in the platinum market that we haven't discussed but should be discussing?
Yes, I think, Martin, I think one thing that's sort of relevant, I think, in the automotive space is that there's been very strong push suggesting that battery electric vehicles are the solution to all ills. And I think that's been increasingly questioned over the last year. And what we have seen is there's been quite a bit of questioning about the very high carbon footprint to produce a battery electric vehicle. So you need to drive that vehicle for a very long time to get the benefit. So I think in the short term, there's a lot of questions. Also, the view is that the battery vehicle moves the emissions from the tailpipe to the primary power plant. And I think that's done two things. I think it's highlighted the fact that perhaps fuel cell electric vehicles, which are ticking along really nicely in the heavy duty space, but that the fuel cell passenger vehicle might be arriving a little sooner. But the other, perhaps more important in the shorter term consequence of that is that the transition between internal combustion and electric vehicles is probably going to take a little bit longer. You've heard a lot more discussion about the plug-in hybrid vehicle that'll be necessary, and certainly the hybrid, the mild hybrid. So what we believe is there's likely to be a slower transition to full electric. There'll be a lot more demand for internal combustion engines, and that'll mean more platinum, palladium, and rhodium. And we've heard a lot of discussion about Euro 7, and I think that is relevant because I think there's a recognition that there will be more internal combustion engines for longer, therefore we better make them as clean as possible. And that cleanness will be reflected in the CO2 efficiency. So I think that'll push up hybrids. It'll also push up loadings. We've got China 6 and certainly tightening legislation in Europe and the US. So I think loadings are likely to be much higher, and there'll be a lot more internal combustion engine vehicles needed over the long term. And I think those two issues are also playing into the price strength and also recognition that potentially platinum's in greater demand than it might be recognized at the moment, Martin.
Thanks, Trevor. That was Creamer Media's Mining Weekly, speaking to Trevor Raymond, the Director of Research at the World Platinum Investment Council.